Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos. A special thank you to those who have subscribed to the channels. I really do appreciate it. And if you haven't done so, consider subscribing to the channel down below and hit that like button if you find any value in the content. Today we're going to cover Stag Industrial for our video stock pick of the day. Stag Industrial is a REIT, so let's jump right into the video. So Stag Industrial, ticker STAG, is a real estate investment trust, or REIT, focused on the acquisition and operation of industrial properties throughout the United States. By targeting this type of property, Stag has developed an investment strategy that helps investors find a powerful balance of income plus growth. Their value enterprise is 9.9 billion square feet, 110.1 million square feet. They operate in 40 states, and they have 551 buildings. Think Amazon type buildings. That's one of their customers. Large industrial warehouse buildings is what Stag Industrial owns and operates. If you want to know more about them, check them out at www.stagindustrial.com. That is their homepage. That is where I pulled this information. So again, as you can see, Stag Industrial, ticker STAG, close of business on June 28th, $31.73, down 0.78% on the day, and they have been falling significantly over the last month, but as you can see here, definitely declined today, which is why we're taking a look at them. Their 52-week range as low as $30.12, as high as $48.27, so at $31.73, definitely closer to their 52-week low. They have a market cap of $5.765 billion. They have a beta of 1, so basically they're as volatile as the overall market, and if we all have been paying attention to the market, it's been pretty volatile lately. They do have a PE ratio of 24.28, but for REITs, this is not really one to look at. You'd have to look at their financial statements. PE tends to be higher on these because a lot of these companies, they do have acquisitions, which means they're buying out other businesses as they go. So when they do that, it will adjust or significantly impact their PE ratio. So that's really not a good metric to utilize for REITs, unfortunately. They do have a forward dividend of $1.46 on the year. This is a monthly paying REIT, so you would actually divide that by 12 to get your payout per month. And they have a yield of 4.8%, which is very nice, a high yielding REIT. Typically this would beat inflation. Right now inflation is higher than normal, so unfortunately it does not. But this is one, as inflation comes back down, that would most years beat inflation. Their next ex-dividend date is June 29th, so if you bought now, you would be eligible for the next dividend. Again, they are monthly paying REIT, so they would pay out again next month. And according to Yahoo Finance, where I pulled this information, again, not affiliated, just where I like to look for some information, they have a one-year target of $43.90, so it does speak to some upside in the price of the stock, and it would be a new, well, no, it would be less than their one-year high, so but close, getting back up there anyway. According to some other analysts who have taken a look at this, again, Stag Industrial, according to 17 stock analysts who have taken a look, they call it a consensus buy. They have a low estimate of $33.33, which is higher than what it currently sits at, which would be a 5.04% increase in price. Average of $44.88, which would be a 41.44% upside. And if it hit the high, which would be a new all-time high, $56.70, that would be a 78.7% appreciation. Again, Stag Industrials is in the REITs and real estate sector. It is one in my portfolio. I have been adding to it lately as it has been pulling back. I think it's down about 16% overall on the year. So as these stocks pull back, that's when I like to jump on them. Increase dividend yield, increase future stock returns if you buy the stocks you're going to buy when they're on sale. It's one of those things a lot of people freak out about the market whenever it starts coming down. I do just the opposite. That's when I look to put more capital to work. You should too, unless you're the type of person who walks into a store and sees a sale and then walks out because you don't like cheaper prices, which is, again, very odd to me. Everyone wants a sale. Everyone wants to buy goods and services cheaper. Your sneakers, your cars, you want to buy those cheaper, but whenever stocks get cheaper, people freak out and head for the hills and don't want to invest. Well, it's no different than the stock market. Whenever stocks go on sales, that's whenever you should be buying, not whenever they're running up and they are overpriced. So again, Stag Industrial has pulled back significantly. Maybe one to watch. maybe one to keep an eye on. If it continues to pull back, I will be adding at these levels. Again, I added some last week, may add some again this week, and so long as it stays below $35 per share, then I will probably continue to add. Once I hit 100 shares, I might level off and back off and look at some other positions. With that said, I don't want to get too long-winded. These are supposed to be quick hitters. So as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell, subscribe to the channel, drop a comment down below. Let me know what you think of Stag Industrial. Is it one in your portfolio? Is it one you're watching? What do you think of REITs in general? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future videos, or constructive criticism. If there's things you don't like, let me know those as well. So long as they're done in good taste, I will take them into consideration. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. We'll see you next time. Thanks for stopping by. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.